Hi there, AT&T is down over 20% from its last peak. The good part of this business is that it pays a dividend around 7%. The stock price has done nothing in the last 20 years, but AT&T keeps paying a nice dividend, and analysts expect the dividend to continue. Now, the important thing is, how much money can you make with AT&T? If you want to find that out, you have to look at the fundamentals and come up with their fair value. As you can see, the revenue has declined from 160 billion to 120 billion. That happened because of a spin-off. But for the next years, the revenue is expected to grow a little, and also their earnings. If you want to value this business, it's better to use their dividends, as AT&T is paying a high dividend, around 7%. So their dividends are expected to increase a little in the future, from $1.11 to $1.17. Not that much, but the market expects a stable dividend. So let's see the fair value based on these estimates. First, the risk. For a 10% annual return, the fair value will be around $11. Now the stock price is around $15. So you can still see another decline in the stock price if other bad things happen, such as higher interest rates. If they go too high, they have to pay more on their debt, and this dividend might be reduced. Of course, if that happens, then imagine what will happen to the stock price. It will go down even more than $11. So you have to be aware of that risk. The great scenario, where the multiple is higher, the market might like this business more in the future. Maybe the growth will improve as AT&T is gaining more subscribers, both postpaid phone and AT&T fiber, and the revenue may increase more than expected. So if that happens, then the fair value can be around $18, and now the stock price is around $15. Therefore, if AT&T has a higher growth rate, then the stock price is quite cheap at the current level. Plus, this scenario can also happen if interest rates decrease. Now they're about 5%. If they decline to 2%, then all the stocks will go up. Let's see the normal case, where the multiple is around 15 and the fair value will be around $15 for a 10% annual return. If things stay stable, I mean their dividend to be sustainable, and AT&T grows a little by 5 to 10%, then you can expect a return around 10% a year. Now, there is a problem you should be aware of, and that is their debt, which is around 135 billion. And the market cap of AT&T is around 112 billion. And the risk is from higher interest rates. If rates go too high, above 5%, then AT&T has to pay a higher interest on their debt. As you can see, the interest has increased by 5% from the last quarter, from 1.6 billion to 1.7 billion. If rates go too high, they have to pay a higher interest. That means they won't have enough money to pay their dividend. And AT&T might lower this dividend. And if that happens, then imagine what will happen to the stock price. It will go down even more. But if rates go down, then this huge debt may not be a problem. So the main risk of this business is from interest rates, as AT&T has this huge debt. Now, the management is focusing on 5G and fiber. As you can see, the subscribers are growing, both for phone and fiber, and also the revenue. AT&T is an utility business. You can't expect a lot of growth from them, but a stable dividend. And of course, you have to be aware of that. AT&T may cut their dividend or lower it if rates go too high. And if that happens, the stock price can go down to $10 or even lower. So you have to be aware of that risk. You can get a nice dividend, but there is also risk. So the current price, you might get 10% annual return if rates decrease a little. If rates go too high or they stay up for a longer period, then you can't expect a 10% annual return. That's why you also have to be aware of the risk. And if you have any questions, please let me know in the comments.